Hi, and welcome to Sunday Night Charts, where we take a look at the charts to help you with the trading week ahead. I'm your host, Steve Van Metre, and stocks are poised. Go to infinity and beyond. Moving averages, colors on your screen. The 50-day is green, 100-day is blue, 200-day is tan. Price versus momentum. Price is general direction. Prices are headed. Momentum is ready to change. A bullish indicator for both is positive. Bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level sellers can't break, and support is the level sellers can't break. Or resistance where the sellers are at, and support is where the buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with timing trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainty. Let's get into the S&P 500. Unchanged in terms of its momentum, but boy, price, this is what a market without sellers looks like. And here you can see the major trading volume on SPY is right around 390. No, there literally is no sellers in this market as buyers look to take the price higher. Where can it go from here? Well, until the sellers show up, there's nothing to stop it. How about the Qs? We've got QQQ, same story, completely unchanged as before. And what do we have on the NASDAQ? Well, a similar story, except it broke through to all-time highs. There was a bit of sellers here on the Qs at around 333 to 336, but right now on new all-time highs, no sellers in sight, holding back tech stocks either. Well, what about small caps? Remember, small caps lead the large caps, and we see just one small change on the ultra short term for annual momentum, which is not a big deal at all. Let's take a look at IWM, and what do we see? A completely different story. Now, again, this is important to understand. We'll take a look at this momentarily. Small caps lead the big caps. You have what now appears to be a topping pattern ahead, or a left shoulder head, right shoulder pattern. Lots of volume right here at 222 per share, indicating this is where the sellers are at between 222 and say 226. And this looks like a topping pattern. Let's take off the volume profile for a moment. And let's add this SPY to this or something similar. How about SPX? That'll work. And we'll zoom out a bit. And you can see where the small caps go, the large caps shall follow. And right now, you can see here, IWM kind of went down. Large caps went with it. Small caps went down. Large caps went with it. And here you see the small caps are not leading. And that is a red flag for the broad equity market. Anyways, let's turn back on that volume profile. Go back to the 1 year here and see what's next. We've got the energy sector, ultra short term, both bearish, unchanged. Kind of odd. A lot of things unchanged from last week. But so far, that's what we got to work with. So let's go to energy sector, and it's consolidating around a bit of volume here. It's holding its 50-day moving average. Remember, rallies start with a cross and confirmation of the 50-day, so you have now two potential confirmations of the 50-day occurring. What does the energy sector want to see? Well, it wants to see higher prices, higher crude prices. Otherwise, you're looking at a zone of selling right here with support at 43. So the sell zone is at 48 to 49. Buy zone at 43. And let's take a look at crude while we're here. What do we see? Sellers have been fairly active around 60, but due to a bullish inventory report, buyers got the best of them, jumped this up, and are looking back at trying to make a run at its recent 1 year high. Actually, I don't know if it's completely their 1 year high. Let's see. Yep, at the 1 year high. Will it make it? I don't know. Sellers have been pretty clear. You've got potential left shoulder head, right shoulder here forming as part of some odd looking topping pattern, but the energy sector needs big economic recovery to drive the bulls on this one. Let's continue with the financial sector. Remember, when financial stocks go up, bond prices go down, interest rates go up. When this happens, unchanged here in this picture. Of course, we haven't even gotten to bonds yet. There is one of the big stories of the week is the bond sector. Where is the XLF? There it is, sitting right at all-time highs as everyone thinks. Economic reopening is going to lead to a massive amount of borrowing. Of course, the question is, will it? But remember, rallies begin with across the 50-day, multiple confirmations, dip down below. But here you go, confirmation of the 50-day is sitting up here right near all-time highs. Nothing to keep it from moving forward, but you had a bunch of bank earnings last week, and that wasn't really enough to drive this a whole lot higher than it was at the beginning of the week. Still, resistance remains just below. We can move this down right. Yeah, I think I had it right. Resistance is at 35, but nothing to keep it from going higher from there. Let's go on to the utility sector. Recently was red. Remember, it was fairly red for a while. Now nearly all green for the utilities. So let's go on with the UTs. Here we go. Utilities looking potential double top. Nothing to hold this back over this last 1 year. You can see it's very distinct supply zones here. Here's buyers. Here were sellers. Sellers were broke through. And this is a next sell zone right here was at 65. Broke through. What's going to hold this back? Well, apparently nothing. But utilities back in vogue really quickly. How about the industrial sector? Ultra short term and short term flipped on, or actually ultra short term flipped on annual momentum. Not a big deal there. This is following the broad equity market higher. And even though we've looked at the industrial sector is not, the production is nowhere near all-time highs, but everyone's bullish on it. How about gold miners? Again, an interesting bit of a change here. Annual momentum remains bearish, but look at this. Intermediate term price is bearish, and long-term price flipped to bullish. We have the 3 month, I think the 1 month is now green. 3 and 6 month are negative and rising, which is good. 9 month is still negative and falling. Not such a major deal, but the 12 month not shown here because I can't figure out how to cram them all in here and correctly space them. Is negative and rising. And that's a big deal. Actually, it may be even green. Actually, it could be plus for the year. I could be wrong about that because I can't put it on here. I have to go by memory. Yes, it would be green. So annual momentum has turned green. What is going on with GDX? Well, it needs to break through. 36 here is kind of a zone before you get to this gap in volume to push GDX to 38. Looking at the 50 days, finally crossed. Remember, rallies begin where they cross the 50-day and a confirmation. So this is potentially the early sign of a bottom in GDX breaking out what was clearly a massive topping pattern. Would that be a clear change of guard? Absolutely. But what about gold? Well, we're going to come back to gold because it's telling us a little bit of a different picture. But for now, GDX is starting to look bullish. I mean, there's some good indicators. When you have the 3 and 6 month are gold, 12 month is green, and you're only worried about the 9 month, which is kind of one of the last ones. It'll oscillate and then flip. I mean, all you need is momentum to turn, and you've got something here. How about emerging markets? Very dollar sensitive here. Short term is bearish on price. Annual momentum, not a big deal. Ultra short term, 3 month is negative. Let's take a look at EEM. If you're bullish on the dollar, you ought to be bearish on EEM. So we have a cross of the 50-day, a tag and a rejection, tag and rejection, tag and rejection. Here's rejecting the underside of the 50-day. Again, this still looks like a topping pattern. Where are the sellers at on EEM? At 54. You can see it in the volume profile. They're all right up in here. So if you're bullish on the dollar, you want to see EEM roll over. If you're bearish on the dollar, then you're hoping this is just a small consolidation before a retest of the all-time highs. Let's go on to Bond King's favorite, TLT. Anything to do with Treasuries, he loves it. All right, ultra short-term price, annual momentum, boom, both flipped bullish. These are the early indicators you want to see from a rally. How about this? 1 month green. That means annual momentum is positive and rising. 3 and 6 month are gold. That is negative and rising. That's a good signal. 9 month negative and falling. Not a major deal because the 12 month, and it's not exactly like GDX, which was green, but 12 month is negative and rising. It is gold. That is one of the biggest signals that I look for as a bottom, is these across the bottom. And now we're starting to see some other signals go with it. What's going on with TLT? Well, as you can see, it tagged its downward sloping 50-day moving average. Is trying to put a stop to this downward trend, and that is the first step as you look toward confirmation of a bottom. So we're back in a supply zone between these two purple lines at around 139 to 140. There's some volume there. This could slip back down into the 138 to close that overnight gap from Thursday. That is entirely possible. But it's it's butting its nose against this downward sloping 50-day moving average, trying to put a stop to this. There's a bunch of volume here, so there's a lot of positive things you like to see about this. Now, when TLT makes this bottom clear. What's the neat part about in terms of rallying? Well, you've got this 140 all the way to 150 is all overnight selling. I mean, yeah, there's some selling during the day, but look at the volume, very, very weak. And that tells you that if buyers, which the Fed is included in this, can keep this downward 50-day moving average from driving prices lower, as you know, what you don't want to see if you're bullish on TLT is a 50-day moving average just reject and drive prices back down. What you want to see is prices fight against the 50-day and just slow that rate of decline down and get it to bottom out. And there you've got the bottom in TLT. Potentially this looks like a bear trap down here as we're back in the supply zone. Again, don't be surprised this gets down to 138, but we've not had, I think this is the first time we'll have seen a major bottom in the bond market where the Fed is buying, the long end of the curve. I mean, if you look at priors, they were really buying the front end. How about high yield bonds? Proxy for the equity market, bullish on price, annual momentum only slightly changed on ultra short term. The 3-month went from negative falling to green, positive for high yield bonds. And let's see, it's right back into, it's finding that sell zone. You see at 87, this is where a lot of sellers have been at, between 87 and up here at almost 88. This is where sellers have been at. This is a positive move for high yield bonds as investors say, hey, I'm not concerned about default risk. At some point they will be, but this is where sellers have been. Overall, this is a bullish move. It would be interesting to see if sellers stand again or they back out of the way and take high yields down to new lows. How about gold futures? A little bit different picture than we have on GDX, ultra short term. Our short term flipped bearish on price, annual momentum on the ultra short term flipped bullish, not a big deal. 3 and 6 month are negative rising, 9 month is green, 12 month, I don't remember. I think it's yellow. No, it would be green. It would be green. So what are the challenges I see here is not that it hasn't crossed its downward sloping 50-day moving average. It's unlike GDX that had that kind of gap in volume. So we can look here and say, okay, if GDX can get through 36, it doesn't see resistance till 38. We'll look at gold. Its resistance is right above it, right here at 1798 at 1800. There is resistance there. I would look for gold to make a run at that, potentially get rejected against its 100-day moving average. We'll see how this plays out. But still, you look at GDX and you say, okay, I see this thing, breaking out of potential this topping pattern. Then you kind of look at gold and say, is this thing just reconfirming, this prior zone up here before it rolls back over? A little bit different story. How about silver? Unchanged from last week. Let's take a look at the chart on silver and see where is it at. And silver indeed is kind of right in the middle of this no man's zone. You can see where buyers are at. They're clearly at this $24 price range. And then you get in here to 25 where it's at, and kind of, again, no man's zone. And then you get up here into the, $26 range, very close into 26. And that's where the sellers are at, between 26 and say 28. So silver's got its work cut out for it, for sure. And last but not least is the dollar. I'm very interested in this week because, we have to look at its moving averages. Now, we've seen, ultra short-term flip back bearish. Otherwise, doesn't look too pretty here. The 1 and 3 month are green. That's good. 6 month is negative and falling. I'd like to see that flip. 9 month is negative and rising. 12 month is negative and rising as well. What's the story on the dollar? And that is, it's crossed its 50-day moving average and it's trying to confirm it. That's where rallies begin. Now, it could slide a little bit below, and as long as it gets some lift off of this, then that tells you it's going to run back up into the 94 range, which we can see. Let's take a look at UUP and see it's coming down. Here it is on UUP, cross 50-day, it's trying to reconfirm the 50-day, and it's got some volume right there at 24.58, to kind of hold that. And then you've got that, big volume, position up here around, 25 to 25.35, somewhere right in there. So yeah, is this potentially bullish for the dollar? No one's really looking at it. But again, remember, Rallies begin with a cross of 50-day. Confirmation of it. Something very interesting there, potentially to happen next week. All right, that's our show for Sunday. We'll see you on Monday for the macro show. The content of this video is provided as educational information only. Is not intended to invite investment or advice. It also has to be construed as recognition or solicitation by a selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steve Van Metre, personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advisors Inc. or Steve Van Metre Financial.